Ladies and gentlemen, Greg Minkowski from ForexLive.com. I want to take a look at some of the commodity currencies. We'll start off with the dollar versus Canada, and then move into the Aussie versus US dollar, and then New Zealand versus US dollar. So let's take a look. The dollar versus Canada, I'm going to look at the 4-hour chart. And the first thing I want to focus on here is the high prices that we've seen over the last few trading days. This is last week's high, and this is this week's high. And both of them stalled within this swing area between the 135.64 and 135.85. This area was defined going back in time to these levels right through here, where we had where the market was alternating back and forth between moving above and then moving below. We moved below here and then came right back up to that area here, and then started its move back above this area right through here, and tried to stay above it here, and then started a rotation to the downside. And it wasn't until last week where the price moved back into that swing area right through here near the 1.35739, and lo and behold, in trading this week, the price moved up to retest that level, only to find willing sellers against that level in trading yesterday and push the price to the downside. So that area held a resistance against last week's high, and also within the swing area going forward. If this price is going to go higher, we need to get above this area, which tops out near the 135.85 level on the top side. Now, on the downside in trading yesterday, we also held support against a low price from last week, and also a high price going back here. That area comes between the 134.96 and 135.01 area. Also near that level is the 38.2% retracement of the move up from the most recent low here to the high price that we saw in last week's trading. So that nice little hold right there during trading yesterday, and the price moved higher off of that level. Let's drill down to the hourly chart here now that we know all those levels, and you can see that in trading here today, the 100-hour moving average, and yesterday the 100-hour moving average was broken to the downside yesterday, finding support against this swing area. This is the same swing area from the 4-hour chart near the 38.2% retracement. Nice. The low price in trading here today, however, fell short of this area through here. And we are trying to move back above, or at least trade above and below the 100-hour moving average. So we'll watch that level at 135.35. So 35.35. If the price can go above that level, that would be more bullish. If the price stays below it, then the sellers could or should see the price retest this swing area 38.2, which is also now joined by the 200-hour moving average, I might add. So key level down here, 134.96. Make sure that you understand that. And if we break below that level, that's more bearish for this currency pair. Now let's take a look at the Aussie versus US dollar next. And I'll look at the hourly chart here. And what sticks out in this is that the market was finally able to get above the 100-hour moving average in trading here today. Now, it was sloppy during the Asian session as the market waffled up and down, above and below that moving average. Sort of forced because why the moving average kept on moving lower, sort of compressing the price against that. But eventually the price started to rotate back to the upside into the European session, only to find resistance against the 200-hour moving average. That's a green line in this chart. And also the swing area here between the 0.6453 and 0.6458 level. Different lows through here, followed by different highs through here and highs through here. We kind of moved up to that level and sold off here. So moving back toward that level. 200-hour moving average of this swing area. Key on the top side, if the price is going to go higher, we need to get above this area right here. That's and stay above that level. Note here back not last week, probably the week before, the price moved above that 200-hour moving average, only to find sellers and push to the downside. So we haven't been above the 200-hour moving average for quite some time, for an extended period of time. If the price is going to go higher, we need to get above that level. On the downside, we'll be watching the 100-hour moving average for support. If the price should move down toward the 64.128 level, look for support buyers against that level with a stop below the level as the market reacts to the moving average line in the Aussie versus US dollar. Let's take a look at the New Zealand versus US dollar next. And unlike the Aussie versus US dollar, the price did extend to and through the 200-hour moving average, in trading here today, only to find that it could not sustain the momentum, similar to going back here where the price found resistance sellers or moved above the 200-hour moving average, only to find sellers and the market failing above that level. The same thing happened here, and we're moving back toward our 100-hour moving average at 0.59299. If the price were to move below that level, that would be more bearish going forward for this currency pair. So for this pair, we'll be we're watching the 200-hour moving average and the 100-hour moving average for trading buys clues. Right now, we're in between those two moving averages, so the price should move below the 100-hour moving average. The bias turns more to the downside. If the price moves above the 200-hour moving average, the price bias turns more to the upside. So there you have it. A look at 3 other currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.